Ladies and gentlemen, good day and welcome to the Q4FY22 earnings conference call of Angel One Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. I now hand the conference over to Mr. Hitul Gutka. Thank you, and over to you, sir.
Good morning, everyone. On behalf of Angel One Limited, I would like to welcome all of you to our Q4 FY2022 earnings call. I am Hitul Gutka, Head of Investor Relations at Angel One. Today we have on the call Mr. Dinesh Thakkar, Chairman Managing Director, Narayan Gangadhar, Chief Executive Officer, Vineet Agrawal, Chief Financial Officer, Jyoti Swarup Raisurkar, Chief Technology Officer, Ankit Rastogi, Chief Product Officer, Prabhakar Tiwari, Chief Growth Officer, Ketan Shah, Chief Strategy Officer, Dr. Praveen Bate, Chief Legal and Compliance Officer, Subhash Menon, Chief Human Resources Officer, Bhavin Parekh, Head of Operations, Risk and Surveillance, Devinder Kumar, Head of Online Revenue, SGA, our IR consultants. We have published a detailed investor presentation and issued a press release to the stock exchanges highlighting our performance for Q4 and for the full year 2022. I hope you had a chance to look at it. With this brief introduction, I now invite Dinesh Thakkar to give opening remarks. Over to you, sir.
Thank you, Hitul. Good morning, everyone. The recently concluded financial year 2022 has been a landmark year for the broking industry. As of March this year, the country had nearly 90 million demat accounts, representing about 18% of CAGR over the past 20 years. Despite multiple headwinds on the way, most of this growth has come over the past 5 years, during which industry has grown at approximately 30% of CAGR. This has been a result of massive changes in ecosystem, along with significant reforms within the industry, both from regulators as well as the participants. Leading the macro transformation within the ecosystem has been a completely overhauled internet infrastructure, access to affordable smart and feature phones, lower data charges, rising financial literacy, expanding income levels, the digitization of various services, and the burgeoning desire from the younger generation to own equities as an asset class. The emergence of fintech players and the dynamic changes they brought to the economy were largely responsible for the rapid transformation of financial landscapes. These players leveraged their digital prowess and capacity to innovate for innovation to build apps that would expand their reach and enable them to seamlessly offer a wide variety of financial products to a significantly large and different market. Coupled with this, a plethora of recent regulation and the development of large digital repositories ensured the safekeeping of personal data and motivated investors to upskill their awareness of financial products and actively pursue investments in Indian markets. The meteoric of growth of broking industry in FY 2022 set a new records in terms of investors' participation. For example, India added nearly 35 million new demat accounts, representing year-on-year growth of around 63%. On an incremental basis, India opened 2.4 times more demat accounts in FY 2022 than FY 2021. This led to a steady improvement in equity penetration, which today stands at about 6.4% compared to over 4% last year. However, even at this level, we are far behind our global peers. Furthermore, FY 2022 has been the best year in terms of average daily turnover for entire industry. ADTO on NSE grew 2.6 times in FY 2022 to rupees 69 trillion from rupees 27 trillion last year. This growth has been fueled by increasing retail participation. The share of the retail investor in cash segment of the NSE stood at 41% in FY 2022 compared to 33% in FY 2016. Direct investments for retail investors in cash segment of NSE in FY 2022 have been stronger with net inflows in 10 out of 11 months, amounting to approximately rupees 2 trillion. This is nearly 2.5x of the inflows during the same period last year. All this reflects the changing behavior of retail investors in India. Today, they have a better understanding of significance of financial fitness. Unlike their older cohorts, the newest individuals value the potential of the handsome returns from equity in spite of unpredictability of current global economy. With significantly reduced return on a low-risk asset, equity are strongly emerging as a natural choice of sustainable investments. The United Kingdom had a similar experience between 1982 and 1992, when inflation and interest rates fell by 40 to 15%. During this period, the percentage of households investing in stocks and shares increased threefold to 25%. This phenomenon is being replicated in India, and over the next decade, I expect we will achieve 25 to 30% penetration. With all industry statistics progressively leaning towards new-age digital businesses, a significant segment of the businesses, including incremental clients and volumes, is turning to those innovation-driven intermediaries. The cornerstone of growth in the investment domain is pioneering technology, accompanied by reliable and relatable content that can be seamlessly integrated by new users who account for a large slice of market pie, both in terms of demat account and active clients. We are already witnessing this trend as the top 5 digital brokers today account for approximately 58% of the total active clients on the NSE compared to approximately 12% in FY 2018. This digital business accounted for about 70% of the market share of incremental active clients on NSE in FY 2022 compared to 24% in FY 2018. Angel has been able to garner a fair share of this tech-led growth to its digital business in the past few years. Our endeavor to offer our client the best investing experience is reaping rich dividends, as evidenced by our continuously improving operational performance over the past few quarters. I am happy to share with you that Angel One commands 10 plus market share of India's total as well as active demat accounts. Our emphasis on deploying advanced analytical capabilities based on data science, artificial intelligence, and machine learning across our acquisition and engagement engines is helping us to continuously improve our market share. This focused approach has helped us sustain superior operating and financial metrics. We are clearly experiencing and expecting sustained operating leverage benefit of our digital model with a stable payback metrics. Going forward, as we commence the journey of rolling out our super app in phases starting this quarter, we are creating intuitive grids to offer more products and significantly improve the dimension of time and monetary value of our clients. I am happy to share with you that the board has in aggregate approved the distribution of over 37% of quarter's consolidated post-tax profit as a combination of interim and final dividends to shareholders. The fourth interim dividend announced early April was distributed earlier this week. Whilst record date for the final dividend has already been communicated to shareholders via our stock exchange notification. I now request Narayan to brief you on operational aspects of the business.
Thank you, Dinesh. Thank you all for joining us today. I will now walk you through the operational performance and recent developments. Our industry continues to report healthy growth despite some macro deterrents due to ongoing political tensions, inflationary pressures, etc. This character only goes to demonstrate the resiliency of our industry. I am delighted to mention that we have reported our best ever performance during the quarter. We have reported our highest gross client acquisition of nearly 1.5 million, total client base of over 9.2 million, 10.3% market share in demat accounts, the NSE active client base of nearly 3.7 million, 10.1% market share in NSE active clients, average daily turnover of 8.6 trillion and nearly 211 million orders. In entire FY 2022, we added 5.3 million clients, which is 2.2 times more than FY 2021 and 1.3 times more than what Angel added over the last 24 years. As we keep adding more clients from all geographies, our presence remains strong, covering 98% PIN codes, and more importantly, with client concentration of less than 0.5% in any given PIN code. We strongly believe there are tremendous opportunities in each of these pockets, and we will play a significant role in nurturing them. Our client-centric approach continues to dominate our product offerings that provide superior journeys, thus improving the overall experience. A reflection of this is also visible from the fact that our lifetime app downloads were higher by 19% sequentially to nearly 22 million, and our ranking in incremental active clients on NSE during the last couple of months improved to second, outspotting some aggressive all-around competition. On the tech front, we continue with our ruggedization efforts, applying surgical fixes, setting up monitoring, alerting for key engineering services. This gives us ability to monitor behavior and respond to incidents before the incidents impact our clients. We have improved our overall SLA to 99.8%, and with further improvements through the year, we will be hitting 99.99% within the coming year. We have embarked also on a journey to unbox a lot of systems. For example, the back office system, which essentially handles post-trade flows. Through this, our clients will have access to a vast amount of data in real-time basis. First impression of this will be available in the initial version of the Super App. Our data science engines feed off of this data to curate insights for clients, ranging from advisory to instrument recommendations to nudges. We are in the penultimate phase of our new mobile app, the forerunner to our much-awaited Super App. This app is now code complete and in advanced beta and validation phase. We will be soon ready to deliver the first look in this quarter. This app will see multiple layers being laid in a very planned and systematic manner for different product offerings to complete the journey of the Super App. During the quarter, there were 3 major releases that were made public to a closed group of users to download the Super App, explore trade, and also provide feedback. The last release, which was done in March, significantly exceeds the features on our current mobile application. This version will not only incorporate personalized financial journeys for a whole spectrum of our personas, but will also refurbish our backend services to support it. The release candidate will be available across all 3 platforms, Android, iOS, and web. Since this is a completely new experience for a Indian fintech consumer, we will be deliberate about the dial-up experience of all the clients. We have a migration plan in place to ensure our clients get seamless, congruous experience during the impending transition. As an expansion of our tech capacity and infra, we are building a new state-of-the-art data center and global disaster recovery capabilities. We continue to build the tech team on principles of engineering excellence, speed, collaboration, entrepreneurship, and obsession with customer metrics. We further expanded our talent pool this quarter with hires from top tech companies across the world like Amazon, Uber, and Walmart Labs. On the product side, our focus has been on streamlining our developments and making changes to meet future compliance norms. We have undertaken some very key improvements to our KYC journey, like allowing clients to choose between monthly and quarterly settlement of funds, providing them with an option to add a nominee during their KYC journey, smoothing the process flow to enable seamless reactivation journeys. On the trade execution front, our product team improved the process and enhanced UI for delivery trades, which led to 50% reduction in order rejection for that segment. We dynamically also worked on placement of various product banners, which led to high visibility. We integrated new live market trigger through our smart API, thus providing greater stability and performance in our app. As a part of our focused effort to provide our clients with wholesome suite of products, we have successfully included the much sought after direct mutual fund product on the distribution business. This went live last weekend on our Angel B app. Over the last few quarters, we'll continue to emphasize on building a holistic ecosystem to empower our clients to invest via this channel. This will effectively lead to expanding the lifetime relationship with our clients. We continue to witness a jump in our net promoter score by 80% in Q4 FY2022 over Q3 FY2022. This was a result of vital tech and product improvements carried out in various parts of our product. Onboarding some of the best tech and digital talent over the last few quarters has helped us achieve these enhancements and breakthroughs. This is a precursor to our overall plan to attain market leadership over time. Human capital has always been at the core of our strategic plans. These are the assets who create and deliver superior experience to our clients, thus making our business robust, resilient, and competitive. As a part of our efforts to keep them primed, motivated, and aligning our compensation structure with best global practices, we have increased the portion of restricted stock units under the LTI Plan 2021, maintaining the overall annual limits as per the approvals received for the plan. Vineet will be explaining the details during his opening remarks. This upfront disclosure is in line with our efforts to follow best practices and transparency with all our stakeholders. With this, I now request Vineet Agarwal, our CFO, to brief you on the financial performance of the company. Thank you. Over to you, Vineet.
Mr. Vineet Agarwal, please go ahead.
Thank you, Narayan. Good morning, everyone. I will take you through the financial snapshot for the quarter gone by. As mentioned by Dinesh Bhai and Narayan earlier, Angel continued to deliver a remarkable performance on all operating parameters for yet another quarter, which also translated into strong financial results. Coming straight to the financial performance, Quarter 4 of financial year 2022 has been our historic best. Our gross revenues increased by nearly 13% quarter-on-quarter to rupees 6.9 billion. Key drivers of the growth of gross revenues were the gross broking revenue grew by approximately 15% quarter-on-quarter to rupees 4.8 billion. This accounted for approximately 69% of our gross revenues. Interest income, which includes interest on our client funding book and interest earned from deposits with exchanges, grew by approximately 8% quarter-on-quarter to rupees 1 billion. This accounted for 16% of our gross revenues. The ancillary transaction income, which is linked to the turnover of our clients, accounted for 8% of our total gross revenues, registering a healthy growth of 63% quarter-on-quarter to rupees 581 million. Depository income, which contributed 4% to the total gross income, registered a decline of 9% quarter-on-quarter. This was due to muted activity in the cash delivery segment. Income from distribution of third-party products, which accounted for 1% of our gross revenues, also declined by 31% sequentially due to fewer IPOs. Our gross broking revenues further split as follows. Share of F&O segment increased to 78% during Quarter 4 of financial year 2022, while contribution of cash segment came down marginally to 18%. Share of commodity and currency segments remained flat at 4% and 1% respectively. The average revenue per client for the quarter was rupees 513. This was primarily due to a higher share of new-to-market clients, which were at about 85% of our gross acquisitions for the quarter. Basis our experience, these clients initially are low revenue accretive, but stabilize and prime in activity with time. This is a secular trend and is not something to worry about, as we expand our base and market share, keeping our margins in line. Our net broking revenue from less than 2-year-old clients on our platform continued to remain robust at 76% in Quarter 4 of financial year 2022. This is driven by the multifold increase in our client base over the last 2 years. The net broking revenue under flat fee plan continued to witness very strong momentum, contributing a significant 85% of our overall net broking revenue. Share of total net income from our flat fee clients to the consolidated total net income grew nearly twofold to 83% in Q4 of financial year 2022 from 43% in Q4 of financial year 2020. Our consistent efforts to refine our acquisition engines contributed to higher client addition whilst maintaining the payback metric of our cost of acquisition within 2 quarters intact. These efforts translated to a very healthy 55% operating margin for the quarter. Keeping the pedal on the accelerator, we will continue our plans to increase our spendings on acquiring more clients across all geographies, focusing on syncing cohorts as prescribed by our various data points, amping up our brand awareness, building the momentum for our new app, building the best talent pool for scaling new levels of growth, which will also include globally competitive compensation packages, both in cash and non-cash. Narayan earlier explained the rationale behind our ESOP mix. The higher proportion of restricted stock options being offered to a larger and crucial set of employees will further create a very strong sense of ownership and, as we often call, their skin in the game. As per our estimates, this will lead to an incremental annual cost of approximately rupees 600 million for each of the 4 years of vesting of the RSUs. While this will lead to an increase in the employee costs, however, it should result in a more than commensurate growth in all our business metrics over time. Under the extant accounting standards, such debits to the P&L on account of grant of stock options being non-cash do not impact the net worth or our ability to distribute dividends. Attractive stock options continue to be an important vehicle of long-term investments in the business to retain quality talent and build a sustainable, growing and competitive organization. Coupled with this, there will also be some regular salary increases in our employee cost for the next year. Our consolidated profit after tax from continuing operations in Q4 of financial year 2022 grew by more than 24% quarter-on-quarter to over rupees 2.2 billion. Once again, our highest ever for any quarter to date. Consolidated earnings per share grew to a robust rupees 24.7 per equity share on quarterly basis. Coming to the full year performance, which is also our historic best, our consolidated gross revenues grew by 77.5% year-on-year to rupees 23 billion. Our consolidated earnings before depreciation, amortization and tax grew by 99% year-on-year to rupees 8.6 billion. This translates into about 51% margin, which is at the upper end of our guided range. Our consolidated profit after tax from continuing operations grew by nearly 110% year-on-year to about rupees 6.3 billion. Our resultant annual earnings per share was rupees 75.8. During the year, we have recommended and paid over rupees 2.2 billion towards dividends spread over 4 quarterly interims and a final. On the balance sheet side, the cash and cash equivalent increased to approximately 49 billion, largely due to increase in client funds. The period ending client funding book was about 17 billion, whereas borrowings stood at about 13 billion. Enhancements in tech capabilities led to a marginal increase in fixed assets to 1.6 billion as of March 22 from 1.2 billion as of March 21. Our net worth increased to approximately 16 billion as of March 2022. Robust profitability along with efficient capital utilization led to a significant improvement in average return on equity to 46%. With this, I conclude the presentation and open the floor for further discussion. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Anshuman Deep from ICICI Securities. Please go ahead.
Yeah, hi. Good morning, sir, and thanks for the opportunity. So my question was regarding the nature of some of the growth that we have seen in terms of clients as well as orders. So if you could give a breakup of what percentage of contracts in options normally are in long versus short, to give an idea that how much of people may be in the money and out of the money, because that could decide kind of their persistency in terms of their trading behavior. So that is question number one. And the question number two is that based on our algo or recommendations that we gave, we have had a certain kind of outperformance, as we have mentioned in the past. So what percentage of trades are done based on those algo and recommendations, and what percentage are without that? So these are the two questions. Thank you.
Yeah.
Thank you very much. Narayan, would like to take this?
Dinesh, you can start. I can take it afterwards. Go ahead.
Yeah. So, Anshuman, in retail, nature of this business is such that people who come to buy options or trade in, I would say, future and option, they tend to have a kind of lower ticket size, and they are very risk averse. They are not kind of very risk taker. They are not very knowledgeable people to write options. So mostly nature of the business is that they will buy options, and mostly to be somewhere near the strike price. And tenure of duration of this holdings option is not more than a day or two. So that is how actually this whole retail market functions. Narayan, if you want to add on this, algo and all that.
Yeah. So just to add to what Dinesh said, Anshuman, basically, see, if you look at our platform, we have covered sophisticated techniques to help people figure out what option strategies to select. And as you know, there is a wide range of options available here, ranging from better strike selection, faster entry exits, better position sizing, better orders, and other briefs, right? So all these option underwriting strategies, we have kind of simplified them and represented them in our InstaTrade product. So using that product, we let customers essentially game out their risk and figure out what is the best option strategy to pursue for their risk appetite at that point in time. Now, beyond this, whether how many options are in the money and out of the money, those kind of details we don't really provide, because that's kind of not very relevant to the product offering that we offer. But our whole business is to give platform capabilities to help customers pick the best strategy to maximize their leverage based on their risk appetite.
Understood, sir. Understood. So basically, because of so you are saying that there are mitigation and close to trade strategies that are being done to kind of make them more educated in their efforts.
That is correct.
Got it. Yeah, I'll get back in the queue. Thank you.
Thank you. Thank you, Anshuman.
Thank you. The next question is from the line of Kartik Sahni from Mirae Asset Management. Please go ahead.
Hi, sir. First of all, kudos on the Q4 numbers. So my question would be around your expansion of the talent pool. You said that you have hired employees from Amazon and Ola, but when I check your PPT, the employee base has actually gone down. So if you can just help me with that.
Yeah, a great question. So see, our strategy, as we have communicated in the past, is in continuing to scale our digital workforce. And as we scale our digital workforce, what's happened is that we have changed the composition, the mix of people that we are bringing in the company. See, Angel is, at its core, we are fundamentally an engineering-driven shop. Okay, so our entire business when you look at the products we offer, when you look at the kind of offerings we bring to the market, the kind of future bets we are taking, all of those are driven by the product and engineering DNA. Now, this engineering is taking place in various aspects of our business, where it's taking place in technology, in finance, it's taking place in sales and marketing, and it's taking place in revenue and many, many other functions, along with core engineering and product. So what you're seeing here is that the shape of the pie is changing. So we are hiring more, for example, in Jyoti's team, and that's where Jyoti is our CTO. He's also on the call. And we are growing there by bringing top talent to help us automate and build newer age systems which will allow us to scale. Jyoti, do you want to add a few things here to give them an idea of what kind of talent we are looking at?
Hello, Karthik. So we are basically looking at people, right, who are force multipliers, right? So in our industry, there are what we call 10x engineers, right? Basically, the few engineers who can produce the 10x of the output of other normal engineers. So we actively look at and go after such engineers, right? So that is why we have got them from places like Amazon and Uber, so we can get much more with a very skillful workforce. So that answers this question.
Yeah, sure. And just one more question that would be around your average revenue per client. So I see that it has been going down, and your market share in the active NSE client has been going up. So can I assume that these are new to market customers that have been targeted? Or, I mean, if you can just help me with this also.
Yeah. So as Dinesh Bhai has addressed this question many times, so I would also I'll just add on to this. This has been addressed in our earnings call also. See, what's happening is that we are attracting a lot of new people to the market. That is testament to the product we are building and the fact that we are penetrating through our marketing strategies and areas which historically have been under-penetrated. So as more and more newer people come to the market, what's happening is that because they are new, there is a gestation period, where it takes them time to get to know the system, learn and such. So the overall, if you look at the average revenue, yes, it's kind of stabilizing. I wouldn't say it's declining. It's stabilizing to the point where we believe that with further improvements to come, there is a extension in the lifetime value of our clients, because these clients we are acquiring now, they are hardly 25 to 29 years old. So there is a much longer time horizon over which we can train and cultivate this cohort base. So that's how we look at our overall business relative to both active clients as well as the net revenue realized.
Got it. And with this super app, I just want to ask that your other two apps, will these be integrated?
Yes, that is correct. We will be integrating all the experiences and eventually retiring the other two applications. Yes.
Okay. Thank you so much. All the best.
Thank you. The next question is from the line of Prayesh Jain from Motilal Oswal. Please go ahead.
Yeah, hi team. Congratulations for a great set of numbers. A few questions from my side. Firstly, Dinesh bhai, we spoke about penetration levels in the country has been low. But if I look at the last 6 months data, the incremental demat accounts that are being opened every month has been declining. The incremental NSE active clients that are getting added is declining. So is there anything to read out here as to, are we entering a phase where we'll possibly take a breather and then possibly in the next round of growth might come through? So first thought would be there. First question would be that. Secondly, with regards to the launch of Super App and a kind of cost associated related to it, we've seen the cost to income ratio really come off in this quarter at around 45% odd level. Do you think that is a sustainable level? And with the kind of marketing that would be needed towards super app or investments in terms of technology? And you also mentioned the ESOP cost that will come in. So what kind of cost to income ratio we should think about? And my last question will be on the, if I look at your revenue per order both in the F&O and the cash segment, that has been declining. And I understand it will be because of the mix between the associated person business and the flat fee model. But do you see this kind of stabilizing now and no further reduction possible? That would be my 3 questions. Thanks.
Okay. So you asked 3 questions. So let me collate the answers and one by one we'll address them. Okay. So yeah. I'll also loop in Dinesh where needed. So, okay, let's first take the meta question that you asked, right, about what Dinesh talked about in his opening monologue, right? See, we all know that the market is seriously underpenetrated. I think that's a very well understood fact. It's barely at 4 to 5%. And so clearly, as more and more customers come to the market, there is obviously going to be a learning curve for the whole industry, not just for any broker. It's for the whole industry is going through this collective learning phase. Now, in this collective learning phase, the type of products, the type of journeys that these customers want, that is what Angel is paying attention to. See, we are not so particularly razor focused on squeezing the last rupee out of the client, as much as we are interested in understanding what is the journey that they care about, because it is ultimately that journey which will lead to greater rewards and greater investment behavior. So if you look at our strategy, it has never been around, it has never been the better way to put it is, it's never been focused around just a rupee optimization, if you will. It's mostly focused on build the right journey, understand what is it that this new cohort base cares about, what kind of investment patterns make sense for them, and then build the right experience on top. So obviously in that evolution which we have started over the last 2-3 years, you will see that our net orders is actually going up, and it's going up across all the cohort bases, Now, if you go one step further and look at what kind of better experiences we want to produce, even our new features such as Insta Trade or Options Simplified, they're resonating with this new age customer, because this new age customer wants that inherent simplicity in the product. So our strategy is going to be around discovering those experiences and building those experiences based on machine learning and AI. And that is one of the biggest differentiators for Angel from everybody else in the competition. This is one thing they are doing much better and very differently. Now, your second question. So sorry, you asked 3 questions, so I'll try to go step by step. So your second one is about the cost to income ratio. I will have Vineet take this, but just to give you just a broader business sense on it. See, ultimately, once the super app gets live, there is going to be an investment in call to action, in getting more people to adopt the app and most people to kind of onboard their journeys, their existing journeys onto it. So clearly there is a cost, but all of this is factored into our net operating plan. So I will have Vineet just give a sense on the income numbers. So Vineet, can you cover that?
Sure.
The ratio? Yeah.
So, Presh, what happens is that historically, as you see, we've been improving our cost to income ratio over the last few quarters ever since we went digital. And that trend is going to continue now. In some quarters, there might be some higher costs for some, like as I said about the incremental salaries that we have given in the first from April itself. So those things will be there, but by and large, I think there'll be the cost to income ratio will be improving as we go along in our digital journey, and definitely with the launch of the super app, this is going to improve forward.
Yeah. So hopefully that answers your cost.
Just one bit on the cost to income. The ESOP cost that you mentioned is 60 crores per annum for the next 4 years.
That's right. So the stock RSUs that we have granted yesterday, for those RSUs and the ones which we expect to grant in the next few months, for those the vesting period is 4 years and the cost is amortized over the 4-year period. So this is going to be the annual cost approximately.
But Vineet, if I understand this correctly, generally this is on a declining way, wherein in the first year we have the bulk of the cost, then it reduces to the second half based on the vesting period. So and you are saying that it will be a 60 crore per annum. So is it a 240 crore to be amortized over 4 years, and the bulk would be the front end and reducing going ahead, or it will be 60 crores per annum?
This is based on the Black-Scholes model. So every year we redo the model based on assumptions, and tentatively I've given you a 60 crore annual cost that is going to be there. And this is, as I mentioned in the call, in the earlier part of the call, this is a non-cash debit to the P&L.
And there is no such related ESOP cost in FY22. This will be new, completely new.
Yeah, this covers mostly all the ESOP cost that is there.
So FY22 we had nothing.
FY22 we did have about 16 crores, 15 or 16.
Okay, got that. And my last question was on the revenue per order.
Yeah. So we don't actually, we don't give macro level data like that.
So if you just compute the revenue in the F&O segment and the number of orders that you give, that number has been on a decline. And I understand it could be because of the mix between the AP business and the flat fee model. But do you think this will get normalized over the next and will not see any further declines, or how do you see that happening?
Yeah. So see, first of all, obviously the ratios, just a simple division is always misleading, right? Because it's looking at a very aggregate picture. Now, I think the question that we are asking ourselves is, what is the user behavior behind what are the trends behind the numbers which are leading to this transformation, right? Now, I do see the numbers stabilizing. There is no precedent for it to go any other way except to stabilize over a period of time. But it's hard to tell whether it will take another 2 quarters or 3 quarters or a few years. But what we do know is that as the overall traction on our products improve, right, the net gains will come largely based on new journeys that we build around F&O, around options trading, and also other segments. So we are looking at the net picture because that is a better indicator of what the market, where the customers' wants are heading. So that is a much bigger question for us to answer rather than looking at a micro level trend. That might be useful, but it's only useful in its own bubble, if you will.
Okay. All right. Thank you. I'll come back a bit.
Thank you. Participants who wishes to ask a question may press star and 1. Participants are even requested to please limit their questions to 2 per participant. If you have a follow-up question, you may rejoin the queue. The next question is from the line of Akshay Ashok from Prabhudas Lilladher. Please go ahead.
Yeah, hi. Congratulations on a very good set of numbers. I just had a few questions. What are the steps you are taking to increase the client activation rate, and what is the activation rate now? Because I think the activation rate before was around 38-39%. Because now that you have added so many clients, the next step would be to activate them, right? Because if markets start falling or there's a downturn, the best way to continue maintaining your gross broking revenues and everything would be having a higher client activation rate. So what are the steps you guys are taking in that direction?
Yeah. So we have our chief, we have Devendra Kumar, who runs revenue on the line. So I'll hand it over to him, but let me just add a few sentences first. So actually, our activation numbers have been steading strong, as you guys know, over the last almost 24 months now. Especially this last year, we have seen a significant increase, right? Now, what we believe is that through a combination of better referral schemes, through a combination of better first trade and the first onboarding journey, we believe there is potential to actually apply data science and ML and take this activation to the next level. So I'll have Devinder talk about some of the key initiatives they are leading.
What is the client activation rate now? It was 37-38%, right?
Devinder, you want to take over?
Yeah. Hi, everyone.
Hi.
Yeah. So we don't disclose our activation ratio as such, but you can take a number of NSE active clients upon the base, which will be, coming out, the new client addition is around 40-42%. But we don't disclose this number. On the answer that what are the steps that we're taking to increase the activation ratio, I think Narayan tells the chord rightly that we have taken a very data science oriented approach. We are creating different cohorts of clients based on the kind of profile that they're coming with and customizing the journey that they take in terms of getting the first investment done or getting the first trade done. So that's the larger theme that we're following. And I think the imminent launch of our super app that is going to come through is going to give us a very strong step in terms of giving this journey in a very seamless way as well, where we have projects like onboarding kit, where the first time trading, first time investment, or first time trade experience of the client is taken care of, the first time investment instruments, and so forth. So what we are doing is basically looking at a mix of these two things, particularly where a cohort-based approach and building new kind of instruments, or not really instruments, journeys for the clients, and exposing the right products for the first timers through which we are planning to go ahead with it.
Okay. Nowadays, the first timers, when they join your app, how long does it take for them to do a trade?
So I think we don't disclose the information, but I think it ranges.
Okay, sir.
Usually, I'll just give you a high level idea. I think that generally we as Dinesh has said this in the past, right? Within about 6 months, we kind of break even. So mostly about more than half our clients are active within the first year. Now, obviously, within that, we don't, because of competitive reasons, we don't divulge any more info than that. But based on that, we can put a good approximation on how effective our strategies are.
Yeah. Final, sir, this commodity market share gains are continuing to be very strong. What is the reason for that? And this cash market share, why again this quarter slightly it has dipped? Because the peak margin norms, I think, have been implemented, right? And why is commodity market share gaining so quickly?
Commodity is clearly a testament to our substantial, we are truly the market leader there based on our super excellent research and our excellent product. I mean, if you yourself haven't used the product, I would strongly encourage you actually try it out, because you'll see it firsthand. The product is beautifully done. That's one of the main reasons and also combined with our super excellent research team led by Amar Singh and the company. They have done a phenomenal job at seeding our position there. And regarding the other question, those changes will happen as regulations keep changing. So those are ultimately that playing field is going to get leveled with time, and we don't see much advantage in those other things.
Okay, sir. Hearty congratulations. Thank you.
Thank you very much.
Narayan, if I can add on this commodity market share.
Yeah, please, Devan. Yeah, please, Ketan. Yes.
Yeah. Hi. Myself, Ketan Shah. To answer this question on the commodity market share, which is growing. So if you look at the exchange volume, somewhere the future volumes are stagnated at 25,000 crores a day. Recently, the large growth is coming in the option market, and we were kind of very early adopter and provider of options on the mobile platform to our customers. That's one of the major reasons that we see as a market share growing. Second important factor is that all our customer has a fungible limit. So when they have a margins with us, across the segments they can trade. They don't have to actually earmark their funds towards the segments. But in the industry that is not available. So these are the two large factors which are driving the market shares higher. So the option volume, while future is at 25,000 crores, option volume has grown to a level of roughly around 15,000 crores a day. And that's where our market share is, very high. And at a blended level, that's how, we are reporting 40% plus market share.
Oh, okay. Okay. Thank you. Thanks a lot. That's it from me.
Thank you. The next question is from the line of Hitesh Gulati from Haitong Securities. Please go ahead.
Yeah, thank you for giving me the opportunity. So just on your InstaTrade platform, wanted to understand the number of users that we have. What is the user base of this?
Sorry? So InstaTrade, we don't give a feature by feature, breakdown of our monthly active or daily active users, but it's a pretty substantial portion, a good portion of our active clients. That's all we can say. Yeah.
Okay, sure, sir. So just another question on stock options. So if my understanding is correct, currently if the person on settlement date, if the long is in the money, he has to take delivery compulsorily. Is that understanding correct?
Bhavin, can you answer this?
Good morning, everyone. Basically, in an option, if there is an in-the-money option that the customer is holding, in case if the margins are sufficient from the customer, we allow the customer to give the delivery. But if the margins are there is a margin call done to the customers, and accordingly, pair of actions have been taken.
Okay. Okay, so thank you, sir. That's it from my side.
Thank you.
Thank you. The next question is from the line of Nilesh Chaitani from BOI Exam Mutual Fund. Please go ahead.
Hi, sir. Thanks for the opportunity and congratulations on the great set of numbers. My first question was, of course, on the active clients. When I see today our active to total client number is anywhere in the range of 40%. But when I compare it to someone like Zerodha, it is northwards of 60%. So I wanted to understand why the divergence, one. And second, what are we doing to drive this active? Because it's a number of trades which will drive the top line growth for us. So I wanted to understand what are we doing on these parameters.
So first of all, we can't comment on our competitors' activation ratio because that data is highly subjective. Your guess is as good as mine. Now, but the bigger question really is that our activation numbers, as I said, is almost half. It's almost 50%. And of course, we don't get into too many details on how it's split and everything. But the key thing here is that many times our competitors, when they run incentive schemes which are of the types of giving somebody a free ETF while opening an account and things like that. So when you take aggressive customer acquisition strategies such as giving out free ETFs, then by definition, if I open an account to redeem it, I have to activate. So that is never a good indication of whether the activation is inherent activation or it is just a forced function of a revenue realization which the client wants to get, right? So what we have seen is that in our case, the activation numbers we are reporting, they are consistently going up, and they've consistently gone up. It was just in the low 30s as early as about 2 years ago, and now, as I told you, the numbers are significantly higher, right? So I see this number going further up as we continue to improve our data science and machine learning based journeys. And this is what Devinder was hinting in his was talking about a few minutes ago, where he talked about our approach in improving the first signing to trade experience, introducing better cohort selection, and introducing better targeting for our clients to help them onboard and start their journeys. I think between these three steps, we have a very clear and winning strategy for driving the number up over a period of time.
Got it. And in the new app, the super app, is helping us to drive the activation rate by any chance for the broking business?
Yeah. So the data is, because the super app has been it's been it's been in the works, and now we are getting obviously lot of early feedback. Yes, the trend is going in that direction, but I need one more quarter's worth of data before I can affirmatively answer that question. But right now it's looking like it's obviously the trending up because we have run numerous studies. But as we launch it further and scale further, I'll have a more measured answer for you. Right? But right now, the off-the-cuff answer based on what we have seen so far is yes.
Got it, sir. Those are my questions, and thank you so much for replying to each one of them. Thank you so much.
Thank you.
Thank you. The next question is from the line of Hiten Jain from Invesco. Please go ahead.
Thanks. So I have a couple of questions. So first is, so I remember Narayan joining the company 1 year back, the first work anniversary, I think this month itself. So I remember that you were quite keen on the super app investment, and your work through, and it's good to see that it's becoming live in beta mode. So I just wanted to understand. So obviously this year was an investment year for your super app. And how should we look about the investments in next year in this? And earlier, in one of the earlier questions, you spoke about the costs, the incremental costs that you will incur to get clients on super app. But just thinking about it, it's just a migration of the existing clients from your existing app to super app, and it's a normal client acquisition cost that you any which ways have every year. So I'm just wondering, how is this cost different to acquire customer on super app? That's question number one. And second is obviously how should we think about investments next year, and even the sustainable margins that you have in mind. And then I have a second question after that.
Great. Thank you for asking the question. So see, first of all, as you know, right, once the super app as the super app gets baked and more people transition to the super app, there is always going to be a long tail of customers who are going to take some time to migrate over. Now, this journey, this migration that we are talking about here is going to be one of the largest migrations in India, and in fact one of the largest in the globe, because we are talking about a wholesale move of more than 9 million clients to the new app, right? So clearly there will be a cost associated with it. Now, we have actually factored in all those costs and built the right kind of tooling and infrastructure far ahead of time to ready ourselves for this upcoming switch. And this switch is going to be collectively excellent for our business and great for our clients. Great for our clients because they get a better journey and better experience. So from a cost perspective, from an engineering and product perspective, there is no much delta, as you rightly indicated, because that cost is already baked in. And it was baked in from the day I joined the company, right? That's what we have been doing for the last 4 quarters. Now, but there is another cost. The cost is, see, if you look at our strategy, we have not really played big in our brand space. We have kept our heads hunkered down and just exclusively focused on building the right product. But now that we have built this kick-ass product, we want to now get it to the masses, which means we need to start investing more in increasing our brand visibility throughout our industry, throughout our with our clients. And this is something that this year is going to be a big investment for us. Big in the sense it's going to be more than what we have done in the past, right? We want to get out there, we want to tell the message, get more clients onto the system. Then, so that's one of the key bets this year. And then subsequent years, see, we firmly believe that the next wave of growth will come from risk and ops. The person that, the team that figures out a scalable way to unlock the value in automating these systems can innovate much, much faster for the customer. So I look at the next 2 years as a start of that journey, where we are going to take a look at our existing risk systems, our existing processes, our existing back office systems, and our existing customer experience journeys, and automate and bring that to the next level. And that is where the next few years of spend will go. And that's largely driven by engineering and product, So hopefully that gives you a sense of what's coming immediately and then what's coming in let's say a year from now. Yeah.
Yeah, I understand. Just to follow up on that. See, one of your aspiration is to become the largest broker of the country. And today, the largest broker has not relied on marketing. He has relied on his product, word of mouth. But you seem to be taking a different journey. So why not let your product speak for itself, and why spend marketing dollars?
That's a fantastic question. And the main reason for that is because now that this is the first time, if you look at our apps, right, we have had two different apps. We have had Angel Bee, we have had AdBar, and then we have had some prior versions. So clearly, there is no impetus for building that organic traffic. Organic traffic builds once you have a consistent platform for sharing your message. So the reason we have not had that opportunity is because we have just not had that product so far. But that is going to change with the super app. So as I play the movie out over the next year, 2 years, clearly there will be more emphasis on organic. But at the same time, our market itself, our job is to also expand the market. And if we can spend more and get more customers on the platform while keeping our core business metrics at a profitable level, then to me, it makes more business sense to go spend that money. There's no point in keeping that and trying to super optimize at this stage, because at this stage, it's all about capturing the market. So it's a two-pronged answer. The reason we have not invested much in organic is, which I just answered earlier, because it's been a platter of apps, and that is changing with our super apps. And once we have the super app, clearly the emphasis on organic is baked right into the app itself. And then the second question is, even if we have that, I still believe that we need to continue to spend and expand this market and bring more and more clients into the system, as long as we can maintain the healthy level of operational profits and excellence.
Sure, I get that. Now, the second part of the question, so while we've discussed the costs, now let's talk about the potential revenue from here. While I understand and I appreciate that your larger objective is to improve the activation rate in your core business, give a better experience, and thereby increase your broking revenues further. But in terms of diversifying into other sources of revenue, while you've already integrated the direct mutual funds, but obviously it's direct, so it is more of added experience to clients and not revenue accretion. Your second intention of getting into mutual funds, it's some time away, but again, it will be passive focus, so again, less revenue accretive. How about other products in terms of, do you intend to add loan against securities, while you've spoken in the past about lending products, and that is something this cohort, the young cohort, would be quite keen to explore, and not so much of the savings products given their age profile. So while you have your beta product ready, but how do you think about the diversified or different revenue sources, and what is the time frame that you have in your mind?
See, I firmly believe that there is a lot of money left on the table as far as broking itself is concerned. So I am a firm believer that we need to stay razor focused on winning broking, and that is the only thing that matters to me for the next year. And I want to be very, very specific about it, right? Because what we have seen is when customers, and you have seen this with our competitors also, right? It's very easy for us to launch 10 different things and do a poor job with all of them, right? What we need to do is think about how we can get and unlock revenue opportunities in our space itself. Because ultimately, the next disruption is going to come from here only. Now, obviously, that includes things like considering products like loan against securities and such. And clearly, we are running those experiments on our side as well. And when the time comes, you will be seeing us launch those products and launch those capabilities. Now, in terms of direct mutual funds and other auxiliary products, see, the reason we launched direct mutual funds is because it is our customers who are actually looking elsewhere because they have an unmet need. So we are actually, it's almost like our latent client base, which is forced to look outside our product because we currently don't have anything. So that made a lot more business sense because we want to give them a wealth garden. And this is something the Devinder's team is currently strategizing on. And, as we look at building out this wealth garden, we look at customers today we are acquiring, and they are hardly 28, 29 years old. So our lifetime value is, you're looking at a 20, 30-year lifetime value. So we don't want these customers to self-cannibalize and kind of go elsewhere when we can give them a much superior integrated product in our own platform. So this is the main reason why we did the direct mutual fund launch. It's not because it's the thick of the moment or whatever, right? We don't approach new businesses that way. Now there are other opportunities also, like lending is another one, insurance is another one. But even before we get there, I believe that there is opportunities to look at fixed deposits. There's opportunity to look at aggregate fixed deposit products. There is opportunities to expand our and more revenue opportunities in commodities. There is obviously opportunities further out in insurance products, which we are also selling on our platform. I believe there are, as a platform company, there will be opportunities to unlock those capabilities in the once the super app platform is ready and it's sold out. So that's how I'm thinking about the next year, 2 years, and 3 years.
Sure. That makes sense. Wish you all the best. Thank you.
Thank you.
Thank you. The next question is from the line of Ankit Babel from Shubhkam Ventures. Please go ahead.
Yeah, good afternoon, sir.
Good afternoon.
So my first question is, now without this super app, you were growing at, suppose, X percentage. So now with
I'm
this
sorry to
app
interrupt
coming,
you, Mr. Ankit, but we cannot hear you clearly.
am I audible now?
Yes, please go ahead, sir.
Yeah. So, sir, now without this super app, suppose you people were growing at X percentage. Now, with this app coming in, can that growth go to like 1.2x or 1.3x? If yes, how? And if no, then why this app?
Yeah. So great question. It's a very fundamental question. So thank you for asking. So see, what has happened now is that our customers' expectations from the app and from the product have changed. So even if we sit and do nothing, yes, it's true that our app is, our current app is also growing at a pretty phenomenal rate, right? And we are actually, in fact, I think we mentioned in the call that we are right now in a very seriously strong leading position as far as new clients are concerned, for this past quarter, right? Now, this trend line is continuing because obviously the journeys are baked in and such. But see, what has happened is that the behavior of the cohort is changing. Customers now, they are expecting a better personalized journey. And this is what Dinesh has said in his opening statement, is that, this personalized journey is what our clients' future needs are. So we have to hedge against that. And we have to build that journey in the most effective way possible. And that is unfortunately not possible in our current app. This is the main reason we decided to build the super app, because our ambitions are far bigger than what you see on our current AppMa application. So to give us space to innovate, we embarked on the super app strategy. Now, what we see as to in terms of your next question on how we see the ramp up, right? I am extremely confident that once the migration is done, it will take 2 to 2.5 quarters to kind of get that over with, right? Once all the customers are into the new platform and hence we take the new app, right? I'm definitely confident that both the acquisition rate as well as the activation rate will go up. Now, whether it goes up 2x or 3x or half x, it remains to be seen, because the super app also is built with a very fast customer closing loop in mind. So we do know that we can iterate much faster than the competition once we have this platform. So I am very confident that you're going to see a double-digit growth once the full transition is complete and the buck starts rolling, on the super app. So that's how we are approaching it as a company and as a management team.
Narayan, can I add something to that?
Yeah, please, Prabhakar. Go ahead.
Yeah, hi. That's a great question. My name is Prabhakar Tiwari. I work as a Chief Growth Officer here. So as Narayan has mentioned, and there has been a theme throughout that, product will play a huge role. We are a tech and product company. And in terms of growth, it will impact both our acquisition funnel and our revenue funnel. But in terms of acquisition, today we operate in a certain channel mix. some other question was regarding, why the competition is kind of growing without marketing dollars, and Narayan answered that. There's a blended approach. There's also aggressive competition, which is in another extreme. So far, we have taken a blended approach of both organic and paid. In future, that blending will change more for organic and referral kind of channels. And also, one important thing I want to communicate that what you have seen last year is our rebranding, moving from Angel Broking to Angel One. And I'm very happy to share that, with Angel One, we have now 84% awareness just for Angel One in 2 quarters.
Okay.
Now, what you will see this year with the new app being stable, the migration being complete, is a new positioning. And the new positioning is around the power of data and technology for everyday investors. We believe both the product experience and the entire positioning around it will definitely help us in the top of the funnel, opening up the top of the funnel for more growth, and also will kind of make our lower funnel more efficient, so that the next wave of growth, as Narayan spoke about, would come at a much lower cost or in a more cost-efficient manner. Thank you.
Okay. So my second question is, now what I understand from your business is that you people have a very high operating leverage model. So, if you continue to grow at a very high growth rate, definitely there would be an operating leverage. And I understand that operating leverage would be utilized or would take care of your increased investments in, say, client acquisition or the increased employee cost and everything. So, just from my understanding, is it fair to assume that what you have done in FY22 in terms of top line growth and bottom line growth can be replicated, say, for the next 2 years also, in spite of the increased investments in these areas?
Yeah. Yes. So what you're seeing is that, the parameters of the business are not going to change. We are fundamentally operating within the same envelope. Just the assumptions and just the growth rates and just our investments have changed within them. But the overall metric and the overall framework stays the same. So your answer, yes, I do see that over the next year, 2 years, 3 years, I foresee the same kind of traction.
Yeah. Okay, that's helpful. And so last one short question: what is your client acquisition target for FY23? You added some 5.3 million last year. Can you double it up in the coming year?
Yeah. Yeah, see, we don't divulge that, but yes, we are looking to, you can say that, we'll be for a company like at our stage, which is growing the rate at which we are growing. Yeah, doubling that is a very aggressive and a very achievable target. Yeah.
Okay, and any targets for client acquisition? Active client ratio? From current 40 to say 45, 50, 55. Where do you see in the next?
Yeah, anything that is we want to obviously anything north of 55, 56% is a good number to hit at. So and we are very close to those numbers already. So obviously there is no upper limit on how high it can go, but there's finite math dictates how high it can go. But we don't talk about those targets, but you can assume that we want to be within that range that we have already discussed. The 50-60% range. That.
That's helpful, sir. Thank you and all the best.
Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants, request you to please limit your questions to 2 per participant. If you have a follow-up question, you may rejoin the queue. The next question is from the line of Prateek Poddar from Nippon India Mutual Fund. Please go ahead.
Yeah. So just 2 questions. One is, you seem to suggest that the migration to Super App is a switch rather than a phase-wise migration, right? Can that be a threat in the sense, like, let's say customers take some time for adoption of new customer journeys on the new Super App? How do you think about that? And ultimately, if let's say in a closed group, the sample set is quite small relative to what you have as a group of clients, right? So if the experience is not good, and if you do it as a switch, how do you, rectify or how, because there could be a loss of momentum, right? So how should we think about that? That's question number 1. And the second question is, it's been answered in some parts, but last month, last couple of months, you seem to outperform even the market leader when it comes to NSE active client ads on the existing app. So how should I think about what is driving this? And lastly, just an extension, overall you seem to suggest that the super app will take you into a different trajectory when it comes to revenue. So how do we think about this revenue? Is it more client adds, or is it higher ARPU, or is it more diversified or ancillary revenues? What takes you into the next week? So 3 questions. Thanks.
Yeah. See, first of all, no, the as with any app strategy, the minute a company pivots and launches a super app, there is always a runway period. Many times investors they get impatient. They want to wait only for 1 quarter before they see results, and oftentimes it doesn't work that way, because the new journey, new experiences, they take time, but they are done with a long-term perspective in mind. So we have built the super app and the journeys based on what the cohort behavior we want to drive on our platform going forward. So what we have, in terms of the switching, that's a very important question, right? See, we are launching the product in phases, and there are gates for scaling up and scaling down our adoption curve based on customer feedback. So we close the loop with the customers pretty quickly, and we continue to iterate based on feedback that we are actually getting from the clients. And this innovative phase has been going on. The app has been in development, and we've had plenty, tens of thousands of beta customers now for almost 6 to 8 months. So I will have Ankit Rastogi, who is our Chief Product Officer. He's on the line. Ankit, can you just talk a little bit about what kind of strategies we are pursuing to scale up the knob on adoption?
Yeah. Thanks, Narayan. Hi, Pratik. Fantastic question there. So as Narayan mentioned, right, we've been experimenting with this CUG closed beta group kind of cohort from last couple of quarters on our super app, or an incumbent for a super app, the release candidate. And it is firmly we can believe that we have seen a cohort of both existing customers migrating as well as new customers. So we will continue on that calibrated approach. In fact, it will be quite a measurable rollout. We call it stage measurable rollout, where the X percent of the users who will get it will again repeat. We'll measure their revenue, their FIRs, full year revenues, their activation and acquisition across various channels, whether referral is working, right, or whether organic is moving up. So between these windows and these matrices and these funnels, it will be a calibrated approach, and we have a capability to kind of quickly address in case there is or arrest any drop, and kind of move this needle from 5, 10, probably X percent, and eventually move to a majority number. And that's why when you hear the answer that it will be at least a 2-quarter plus kind of an approach which we are taking on the transition. Yeah.
Got it. And the second question on you guys outperforming the active client additions, outperforming the market leader. Any thoughts? How have you been able to do this?
So actually, I should specify that we have been while our current app has been kind of in low touch mode. There have been many capabilities and features which have been introduced towards the tailing part of last year before we called the code freeze, and now you're starting to see our clients take advantage of that, and you're seeing more momentum build around those. Okay, like obviously InstaTrade is one option. There's a lot of others in the pipe. So we should not downplay what we have done in the past year on our existing app. And then other thing is clearly our investments in digital marketing have paid off. We are one of the first companies to take a very nuanced look at applying both AI and ML techniques to our client acquisition strategies, and that has obviously resulted in better cohort selection and better realization of leads which have come in through the funnel. Because we have also invested heavily in optimizing that funnel right from the time the lead comes to the door to the time we actually open an account. So there's been a combination of both better product improvements, better tech capabilities, better system uptime, and obviously digital improvements in the entire acquisition.
Narayan, can I add?
Yeah, go ahead.
Right. So, Pratik, just to address, right, so on our current app, right, as Narayan mentioned, we have come to close to 4.2 Play Store rating, and we continue to see a healthy improvement there. So the answer to that is a lot of our strategy has been fixing the backend services, which apply, by the way, to both the platforms. So anything which we do for Super App is kind of also helping the existing platform inevitably. So the robustness of the ability of that is also getting the benefits. So you will see as a result, customer continue to enjoy a healthy experience on the current app as well, while we have making inroads for the Super App.
Got it. And the last part of my question on the Super App, when you get that higher revenue, what drives it? Is it client acquisitions or higher revenue per client or ancillary revenues, or it's a mix of all the three? Maybe just
it's a mix of all the three, driven by the user journey. What ultimately drives greater revenue in any digital business is the customer experience, and the fact that our journeys are in line with what customers' needs and expectations are. So in the Super App, the entire journey is built around it's tuned very much to what our to what our clients' capabilities are, their risk profiles are, and ultimately helping them onboard with the system in a much more simpler way, which obviously doesn't exist in our current app. So it's a combination of two or three things there.
And lastly, any update on AMC?
Yeah. So as we mentioned, right, we are already the process is underway. And Vinny, do you want to just share some updates, the latest updates on the AMC side?
Sure, Narayan. So Pratik, on the AMC, as you are aware, in September last year we made the application for the in-principle approval. The process is on. SEBI is doing their due diligence, and hopefully in the next few months we should have the in-principle approval in place.
Fantastic. And all the best for the future. Thanks.
Thank you.
Does that answer your question, Mr. Pratik?
Yeah, all my questions answered. Thank you.
The next question is from the line of Kajal from Isaac. Please go ahead.
Hello. Hi. Congratulations on good set of numbers, sir. I just wanted to understand that we had initially started as a transformation journey, and now that we have seen that the brokerage and the total revenue is 78% around that only, but the mix has changed significantly towards F&O versus cash. So do you think almost 78% is now F&O and cash is just less than 20%? So do you think cash going ahead is going to be very, very insignificant portion of your total revenue? And how do you see your revenue mix evolving?
Yeah. See, the cash segment is, first of all, I should say that it's obviously an important segment, like all the other segments that we have, right? But clearly there is a industry trend which is buckling the whole mix, as you rightly pointed out, right? And honestly, when we look at the business, right, it's very hard for us to say whether it will stabilize at this number or what the overall mix would look like. But we do know that in terms of total number of orders, and the total number of orders has gone up dramatically in this past year, as you've seen, right? We are focused on driving that aggregate volume up, because that is a macro level trend which we can control, which not control, but we can create and devise strategies to drive that versus cherry picking on which one of these individual approaches will work. So, and there's also future innovations planned on the product side, which you'll see us, which will drive up value on all of these segments actually, also going forward. So it's hard to predict where the puck will land, but we can say that it's still the mix will remain healthy, and the overall aggregate number will be the one that we are focused on.
And what will be the share of algo trading in our overall volumes?
So right now it's very non-significant it's not even material also, because we don't have any particular algo products, if you will. We have our system generated product, which is called ARQ, and that is something that we have built in house, and but that's also that doesn't technically qualify as a algo product. But so to answer your question, it's close to zero at this point. The two algo.
ARQ form significant portion? Is ARQ giving you?
ARQ is a meaningful chunk of our people who come and onboard onto our systems and try out. Yes, but it's not. It's still a product in alpha, if you will. So it's still not fully baked into our mainline offering. So it's something as we continue to break that journey into the super app, we are expecting that as a service subscription, there'll be more action coming on that side. But at this point, it's kind of in a different bucket.
And the last question is on the employee side. So you have said as always that the mix has been changing. So incrementally, are you seeing that pressure on the cost side for getting those employees because market is good for the IT side or the engineering candidates? So how do you see that cost going up for you?
So, we started this transformation journey 3 years back, and in these past 3 years, we have had the advantage of honing our strategy every year. So now we have hit a point, we have hit that sweet spot where the unit economics of hiring and the whole cost curve, it's perfectly settled into our system. So there is no surprises anymore. So I don't see any of these cost fluctuations affecting us dramatically because we already have the playbook on what it takes to attract top talent in the market, what kind of structures, compensations we need to put in place, and what kind of reward structure makes most sense for our business. So we have had almost 12 months worth of bake time to kind of eliminate that uncertainty, at this point. So there's no uncertainty on that side from our side.
Okay, thank you, sir. Thank you very much.
Thank you. The next question is from the line of Shahesh Mittal from HDFC Securities. Please go ahead.
Hi, sir. Good afternoon and congratulations on a great set. Sir, so most of my questions have been answered. Just 2 questions from my side. What are the new investors doing and how is their trading intensity, given that now we have people moving back to offices? Could we expect these kind of trends in the derivative segment to continue for the industry?
Yeah. So, now people have been going back to work almost 6 months now, right? Everybody is those dark days of COVID are behind us, touch wood. But and what we've seen is that in these two or three quarters which have preceded us, especially the last 2 quarters, which we all agree that they have kind of been in the post era, if you will, right? While the behavior has changed, there has been no ascertainable impact on our volumes or anything like that, because as you yourself have seen from our results, there's no the stability and the naturalization has already occurred. So our business is already growing at a healthy metric, and I don't anticipate any further changes there. And in terms of changes in investment behavior, see, obviously because many clients are young and new, their ticket size is still the same, interestingly. So they're still having the same ticket size, but obviously the approach with which they enter the market is very different, right? It is driven by many social-based investing schemes and things like that, which is not true for folks that are in their mid-30s or a little bit later in life. So there is a explicit change in behavior, and this is why I was telling you that I was telling the others, right? We need to build this super app journey now, because there is a tailwind in the market that the expectation has changed, and that is what we need to get ahead of.
Thank you. As the participant left the queue, we'll move to the next question, which is from the line of Pranav Gupta from ASK Investment Managers. Please go ahead.
Yeah, hi. Good afternoon and congratulations on good set of numbers. I have 2 questions. One is for Narayan sir. Sir, when you talk about the super app and how it will be the key driver for taking the revenue trajectory to the next level, just wanted to understand that initially when they are migrating our existing base to the super app, typically given that our revenue, large part of the contributor is F&O, which is a flat fee base. How do we engage with customers more, and how do we see the same set of customers do larger amount of trades which will then eventually drive revenue. I understand that when you acquire new customers, new trades will be added, but how do you engage more through the super app and increase the current trading volumes of the current customer base? That's the first question.
Correct. So see, the easiest way to drive up these numbers is by addressing customers' pain points. Now, if you look at our existing app is super excellent in many dimensions. But an area that we are not, that we really need to do a better job is our reporting systems. So anytime if you introduce a constraint, or if you kind of dampen that journey, obviously the user is discouraged from spending more on your platform. Why would they come and agree for a substandard journey? And this is what will change in the super app, because in the super app we have taken a holistic approach. Like on the main page itself on the super app, you can see your overall portfolio, you can see your asset mix, you can see what's your composition of stocks, bonds, you can see your risk profile, everything in one clean, neat package. Then there are videos and structures towards the end with cue cards that let you figure out what kind of capabilities, features you want. And I'll let Ankit add a few more to the. Ankit, just why don't you add a few sentences on how the super app journeys are different, and then I'll take over the remainder of the question and answer about the impact to revenue. So go ahead, Ankit.
Yeah. So Pranav, just to follow up on that, so the fundamentals of super app are pretty much like the simplicity which we are adding, which is bounded by our personalization capability, starting from the homepage, which Narayan mentioned. Even if you are an SMS data, probably a rate will pop up for you earlier, right? Or based on your history, the recommendations will come in. Similarly, the super app is not just on this feature and UI and UX experience, right? We are building up inherent improvement in our availability and reliability of our product, which is much more crucial, right? Any app has to be much more predictable. So this app will bring in a very predictable experience to a fashion trader as well as to, say, a new guy where we are stuck in where to activate this guy, right? What should be my first trade? This is also a reflection of the entire post-trade experience, which we are significantly revamping in our super app. The transparency level, which is one of the tenets of our super app, will be I think industry first. So and one more point to add in, it's also the speed of the platform which is I think a very key driver for an option trader, which will be significantly better. We are improving on our streaming services. We are improving in our caching for chartings. So those are a couple of initiatives which will be visible.
Right. So the meta point here is that generally people, the question to ask is, why are people spending the most that they can on our platform? Are we realizing 100% or 150% of the revenue potential from every client? And the answer to that question is, on our current platform, the answer is no, we are not. Because the fact, and why are we not realizing that revenue potential? Because in our current app, there are many journeys which are not as fully baked or as fully mature as we want them to be. So naturally, when we move to the super app, obviously the volume will go up because the revenues have been, the journeys have been fully baked. Now, whether it's hard for me to predict whether you're going to see it all in just one quarter, or will it take us, the 3 quarters or so till the whole flow becomes normalized. And I think that kind of variance is to be expected from any tech business. So we are giving ourselves also that time so that we can avoid any false start and not shoot ourselves in the foot before doing any big migration like this, right? That has to be done in a very thoughtful way. So, yeah.
Narayan, can I add something?
Yeah, please.
Good. Yeah. So, just to answer this in a more fulsome way, what happens is there are different types of clients. There are first-timers coming in, there are traders coming in, and also when a client comes in, they have a life cycle. They start slow. They will switch different products, over a period of time. Now, what has happened in app now? Obviously, we have been delivering the same services through multiple platforms like WhatsApp, through notifications, through the system itself. But when they are building the super app, what we are making sure is that the platform itself, in a real-time basis, morphs to give that services in a real-time basis to our clients, to the different set of clients like the first-timers, the traders, and also based on the life cycle, which stage of the life they are. And also, Super App allows us to build multiple services. Like, we are planning to go live with mutual fund, eventually insurance, and other subsidiary services, which are a seamless experience for a client. And we believe that in today's platform, this is done in a much more communication-oriented way. This will move seamless into a real-time process in Super App, where you can use this mix at the right time, at the right place, which will allow customer to have a great experience and actually show the confidence of using and experience services to the optimum level with the booking services that we are coming up with as well.
Great. Right. No, I understand this, and I understand when you say that the customer journey, when it improves and when it becomes more seamless, a customer will probably engage more. Just wanted to understand how do you even monitor this? Just as an example, if you use the example that you said, where that there is a reporting system, or the reporting system is sort of lacking in the current app, and it will be much better than the Super App. Just want to understand how do we monitor that a customer has moved their business or part of their business elsewhere.
Correct. So
will come back to the Super App. Just want to understand that.
Right. See, obviously we have not seen clients who have departed from our systems. Our bounce rate is very low. It's less than 5% or something. It's not even meaningful, right? Which means that once people come to our platform, they are staying on the platform. But that is not the same as somebody who is staying on our platform and spending the most that they can. So our problem is that they are not spending the most that they can, because we ourselves are seeing drops in those journeys. So our product flows have detailed metrics behind them, and we have studied this behavior over a period of time. So we know that these are the frustrating points for the clients, and this is customer feedback that we have gotten from surveys and stuff. So we have 360-degree view and our own insight to actually improving the journey. And that's what gives us the confidence that this data-based approach, this data science-based approach, will actually lead us to the right end state.
Okay, so if I understand this correctly, and just to close the loop on this, what you're saying is that when we see a customer drop off in the middle of our journey, that is how we understand that the customer is not spending as much as they could have on the app because the journey is lacking somewhere. Is that the right understanding?
Absolutely. Okay. Very much like if you go to Amazon.com and if you get stuck updating your profile page, odds are you're not going to go back again in a few hours. It's going to frustrate you, right?
So we will not be able to quantify this, but this is a qualitative way of understanding that the customer is not spending as much as they could.
Exactly. And this is what we have spent a lot of time studying. Ankit and his product team have lots and lots of data about each and every journey, where we know where the customer is frustrated, what has gone wrong, what can we do better. And the synthesis of whatever we have understood is there in the Super App. That is really how we have built it.
Understood. Very clear. Just a second question, and a more broader question. If you look at overall industry, ADTO is obviously largely driven by the F&O or derivative segment. And if you look at it over the last 2 years, it is almost more than quadrupled. Like one of the participants also asked earlier, how do we understand the sustainability of this trading volume or trading that is happening currently, and how should we look at it over a more medium to long term? Maybe right now we are seeing elevated volumes because of various reasons, but how do we extrapolate this to the medium and the long term?
Yeah. So actually, this question, Dinesh has written a beautiful slide on this. So I would actually love for him to answer this because he's the best person for this. Dinesh, are you on the line?
Yeah. So my line dropped. Can you just repeat that question, please?
So the question is that over the last couple of years, we have seen ADTOs for the industry grow significantly, and especially driven by the F&O segment. Now, this has been driven because of multiple reasons over the past 2 years. How should we look at the sustainability of this, and how should we extrapolate this for the industry as a whole over the medium to long term? Because in the short term, maybe this will sustain, but how should we look at it over the long term?
See, what I believe is that we haven't even scratched the surface. We are just right now just capturing land grabbing and getting customer in our fold. But if you look at optimal kind of like investment that what a person has to do in equity market, I don't think we have reached there. Currently, we are like most of the customers are in the age group of 25 to 28. So they have just started their vocation. They have started their earning phase. So right now there is nibbling in equity, but I think serious phase of investment will start yet to come. So I don't believe what we saw is really a peak. I would say what we saw is just a beginning. If we talk about market penetration, that Angel is able to cover 98% of pin codes, but if you look at wallet share that we are able to get in our market is very minimum. So that's the reason we are actually looking forward to super app, building content, building journey, so that we are able to increase lifetime value of a customer that are onboarded. So my answer would be, yet we haven't seen the best in this industry in terms of wallet share getting into our market. Looking at campaign like macro picture where inflation rate is so low, there's no other option for a youth to get into our market. So overall, I feel that still that we are yet to see a increase in wallet share. Today we are just talking about market penetration of demat account that we are able to open.
Right. So just one small follow-up, and that will be my last question. Wanted to understand from you that, again, over this last couple of years, a lot of the market has also been, a lot of the new investors that you spoke about have also made a lot of money because of the run-up that we have seen. Do we believe that the customers will remain sticky or will continue to do the volumes that they are doing currently if we see a slump or an elongated slump, not a short-term slump, say for a month or two, but if we see an elongated slump, do you believe that these customers will still remain in the fold and continue to trade at the level that they are today?
See, we share a slide of this on like impact of market volatility on number of trades. Now that we are into flat fee broking model, so if you look at number of trades, even in times of like Lehman Brothers crisis or when India was facing big kind of like challenges because of high inflation, we never saw a drop in number of trades. So that is very like true for a traditional broker where a ticket size of an order goes smaller. But for a player like us, customers who are active, they remain active. What they do in bad market is that they reduce their ticket size. Instead of like trading 1 lakh per order, they may trade maybe 50,000 per order. So overall, I don't see any kind of like trend going down in terms of number of orders, even though market has been cyclical. Worst case was with Lehman Brothers crisis. We will not see decline in number of trades on NSE. So overall, I believe, as I said, that we are right now acquiring a new set of customers who have no other option but to put serious money in equity. Right now, there is willing. I think this ADTO and participation from per investor is going to increase from here.
Thank you. Ladies and gentlemen, this was the last question for today. I would now like to hand the conference over to Mr. Dinesh Thakkar for closing comments.
Thank you everyone for joining us today on this earnings call. India is on the path of achieving long-term sustainable growth, and this growth will become a reality in an inclusive and proliferated capital market characterized by significant penetration of equity. As highlighted earlier, New Age India is gradually understanding the benefit of arbitrage in returns between low-risk assets and equities. According to a study done by Deloitte, access of smartphone will increase significantly over the next 5 years. Growth of smartphone in rural India will be 2.4x that of urban India. These are the realities of future growth of fintech companies like us, and the extent to which we prepare for the presentation of the comprehensive financial product suite for the potential clients will position us ahead of the competition by catering to an evolving need of this untapped market. We will spare no effort in helping investors achieve their goal while also improving their overall investment journey. We have successfully demonstrated the implementation of our digital strategy over the past 3 years and plan to augment the same as we move forward to achieve our goal of attaining a leadership position in the retail broking industry in India. I am certain this goal is not too far away. I wish to thank you all for your continued support and confidence in Angel One. For further queries, please do reach out to Hitul Gupta, our head IR, or SGA, our investor relations advisors. I wish you all a good day. Stay safe and stay strong. Thank you.
Thank you. On behalf of Angel One Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.